Well, good morning, everyone, or good afternoon. My name is Barbara Armstrong. I am a coach and senior manager with Charles Schwab, and we are going to talk trading a smaller account. I have a page full of notes. We have a whole bunch of trades on. Several of those require attention. We have one that has hit our target this morning, and then I've got a whole list of trades. Today is Energy Day. And, I know that you guys are feigning surprise over that, but we're going to talk about energy stocks today and ways that we might trade an energy stock in a bullish, short-term, risk-defined way. So we're going to trade several different strategies that are bullish or bullish to neutral. And every single one of them is going to be in the energy sector. So buckle up. We have a lot to cover. Also, get your fingers ready to participate and do a little typing because I like to run a semi-democratic class. Get ready. Also, if you are not following Connie and I, because I've got Connie in the chat with us today, and Connie is a friend and fellow coach, and she posts a lot of great content on X. So if you are not following Connie, you need to fix that right away. Her handle, Connie Hill CS, mine is Barb Armstrong CS. So be there, be square. All right, so just before we get into the thick of things, a quick reminder that options carry a high level of risk and aren't suitable for all investors. You have to apply for option trading privileges through Schwab, and not all will necessarily qualify. Also, we use the paperMoney software application on the thinkorswim desktop platform. Try saying that 3 times fast. But this is a brilliant place to make sure you understand a trading strategy, that you have a trading plan in place, that you've practiced trading that plan, that you understand the mechanics of how the platform works before you go into your live account. There are some nuances and differences. One is that a short position will never be assigned early in paperMoney. That can happen in a live account. Okay? So just so you know. This morning, and 4 mornings a week, there is a Trader Talks at the market open, and they do a wonderful job on looking at the market. So we are going to do a super fast skim on that. I spend very little time on that in these classes now. We're going to place a bunch of new example trades, and we're going to do some trade management, and then one trade review. If you have never been to a live event, the weekend of the 13th of March, there is an event in Atlanta. If the registration is full, if you live in the Atlanta area, you can still come and register on site. It is free to attend. That is I think an introduction to options and technical analysis class. And then we've got a 2-day event coming up in Denver. That followed by an advanced options event in Dallas at the beginning of April. And then we're going to Boston for the first time in a long time, April 17th and 18th for another 2-day event. And these are all free to attend. It's how I got introduced to the world of trading back in 2011 by attending an event like this. So I was just in San Diego last weekend, our first market drive of the year. And I still love attending these events, both as a client, and I certainly loved attending them as, I love attending them now as a coach and getting to meet some of you. So yeah, I think it's going to be Rachel and Kevin and Ben Watson who will be in Denver. If you get the chance to go up and meet them, please do so. I know they'd love to meet you. Okay, so let's roll on. We've got a lot we want to cover here. So given that it's already up, let's do our super quick market overview first. So when we come and we look at the SPX and come to mama, we're seeing, it recently, end of January, hit a new intraday all-time high. The overall intermediate term uptrend is still uptrending, but we're seeing a little bit of consolidation here today, bouncing off this area of support. Where it opened a little lower, but, has rallied throughout the day. When we look at the NASDAQ, spoiler alert, similar theme all around the block here, although the NASDAQ is technically, up on the day. it's been consolidating also. But this area of support appears to be holding here as well, which is, interesting given all the, global things that are happening right now. And the same thing as the Russell. Now, these are not new lines. These are lines that I'd already drawn, indicating a diagonal support level. And it looks like this, support level is still holding here on our small caps. And then when we come to the Dow, variations on a very similar theme, right, guys? Right. And again, support and resistance are areas. They're not finite numbers. Yes, I have been watching AAOI. Okay, somebody mentioned AAOI. Like in the last 2 trading days, this stock has gone from 59 to 110. It's almost doubled in price. Yeah, crazy. We are not trading that today. But given we're on the letter A's, we're going to go to AU. Because with AU, we bought the stock and we had a fib target here of 130. And when I first looked at this today, it was up on the day, but it hadn't quite reached 130. It hit 129.14, and that was our target. When I looked at it, it was at 128. We have 44 shares. So if we wait for this 120 or this 130, it's $3 a share we're waiting for times 44. So about $120. When I looked at it first thing this morning, it was like $45 that we had, that we could potentially gain. And when we come up and we look at AU, we're up over $600 on this stock. And so here's my question. We have this inside day, and we have this doji pattern at a potential resistance level. Do we stay or do we go? So here's our, because what the market giveth, the market can taketh away. Now on Friday, we tightened up our stop. So, do we take the money and run? Cue Steve Miller. So do we take our profit or do we hang out? So I put a little poll in the chat. So while you guys are answering that question, let's go and look at VLO. Now, VLO gapped up today, as many energy stocks have done today. And we had put a long call vertical on back on February 13th at 195 and 200. And as we typically do, we were bracketing the current price. And so today it hit our target, which was a 50% gain. And so if we come here to account statement and we look at VLO, we bought it for 280, we sold it for 425. And so, how much did we make on that? Let me just bring up my drawing tools. So, whoops, they're quite sensitive today. 425 minus 280 is $1.45. So we made $1.45 a share. We did 2 contracts, so we multiply that by 200. So we made $290. And for us, we consider that a success. One, because, we followed our rules, it hit our target, so check. And 2, we made a nice little return, $290. I mean, that's certainly a base hit. And, as a return on risk, we could have lost this whole 280. So our return on risk, 145 divided by 280. You're wondering how to calculate that. If you're new to this, please type a greeting into the chat so we can welcome you. For those that are seasoned veterans, you've seen me do this, hundreds of times. But that's a 52% return. Our goal was to make a 50% return. But sometimes, when we're putting these on live in the markets, our targets don't come out at exactly 50%, or sometimes we get a little better fill than what we asked for. Like in this case, we asked to get out at 420, which would have been a 50% return. We got out at 425. So we got a little bit better fill because it had gapped up on the open. Okay, so, oh, I put it as a question instead of as a, now I'm not seeing my, okay. How about the chat? Let me see if I can close this live chat. I want to see all the chats. So I'm getting some, oh, okay. Do we take the money and run? Oh, so you know what? I put it as a question rather than a poll, guys, so it's not going to give me a percentage. So just let me scroll through and kind of look at your commentary. Take the money, take the profit out, take it, yes, go take the money. I have a wait. I have 2 waits and 2 stays. So it's kind of split. Will is saying hold. Life in the fast lane is saying go. Jack is saying take the money. We're going to take the money on that. Okay. So, and VLO, it hit the target. So we're out of VLO. So this is AU. And the reason we're going to take the money on this one is because this candle is indicating that it may be pulling back. So if it does pull back and then it starts to move again, could we place another trade? Sure, we could. In fact, we have a 1 ATR trade on this one now that we placed on Friday. And so we're going to come to our monitor tab and we are going to come to our working orders. And on AU, we are just going to cancel these orders, cancel the whole ACO group. Okay. I find this sometimes the easiest way to exit a position where I have both a target and an exit. And you know what the market giveth, the market can taketh away. Like it's already taken away 10% of that gain today. So we are just going to come in and create a closing order to sell this. And whoops. We are going to create a closing order to exit this position. And to take that unrealized gain and to move it into the realized gain component. Okay, so that's AU. Now, I had a lot of requests on Friday to look at Boeing. So we had placed 3 bullish trades on Boeing. So we're going to look at Boeing, and then if you weren't there the day we placed the Boeing trades, not to worry, we'll go and we'll place a new trade after we look at Boeing. So with Boeing, we did a long call and we did with this target at 253, which was a swing target. And then we also bought the stock and we did that back on this day. And on that same day, we also did a long call vertical. Now, we expected, our expectation, given our superlative technical analysis skills, was that was just going to march right up and hit our targets and we would be out. And it didn't do that. Like it came up and then it started lollygagging about. Now it's pulled back. And on Friday, like it had this candle indicating that it may have found a new support level. But, it broke this support level. So that was worrisome. Today we have a bullish engulfing pattern. And so that's, additional confirmation that this may have found a support level. We already exited the long call. So we're out of the long call. Now the long call vertical, we have until March 20th for it to come back and go back above that 135. And if we want to see both strikes, we could make this 230. Which is the lower strike. Right now, it's gone through both strikes. One of the things that is standing us in good stead is that volatility in the market has gone up. And that's, if we have a current long call position, that can be helpful. Although it came, up to almost 26 today and then has pulled back down, but still at 2105, like that's at the high end of the range of where this has been. And given what's been happening geopolitically, we're not surprised by that, right? But when we look at Boeing, we have time in our side with the stock position, but this has not gone the way we would have liked. And some of us might say, well, instead of, these lines, the line I'd like to see now is this line, and we'd like to see it break above that. But we're going to watch this closely, and we still have a couple of weeks for it to rally and get above that. But if we get another bearish candle, we may just say, hey, this is one of those trades that did not work out for us. And so we still have the stock. We're down $100 on the stock position. We were down 150. So, we've gained a little bit back on that. When we come and we look at our long call vertical, we're down $57 on that. And our rule of thumb is if we're down 50, we're out. Now, we don't have to wait till we're down 50 to exit the position, but that's where we currently sit on Boeing. So on Boeing, we're going to hang tight, but we're going to watch it. Now, Netflix is our short call vertical, and like, what in the Sam Hill? Okay, we'll look at this one also. So this has been downtrending like pretty significantly, since October. It's barely even made it up to the 30-day moving average. The 10-day moving average has been acting as a ceiling on this, or a resistance level. We placed a trade this day. So when we go back and look at this, it's like, did this trade make sense? And this was a short call vertical where we wanted it to stay below 80. I think it was at 80 and 82. And I think it's March 20th on this one. And so, no sooner did we place this trade than it has gone up 1, 2, 3, 4, 5 days straight in a row. It has gone up by 30% in 5 trading days. So good for Netflix, bad for us, because we placed a neutral to bearish trade on it. Now, this is where you're grateful for having placed, honored your position. So we're at 192.50 here. So we could lose another $8, but chances are we take a max loss on this. When I looked at this earlier, it was actually at 202. And this is where the fact that volatility's gone up in the market in general is not helping us. But the odds of us recovering from this are not highly likely. So we might say, well, you know what? We could lose another $20 on this, or another, 750 times 3, another 2150. Maybe we just end the pain. And so we're going to come to Netflix and say, hey, if we can get out for $1.95, we'll take it. And it may, we may have trouble getting out for $1.95. But it's interesting to me when I first started. That was a short call vertical. We haven't done very many bearish trades. This was Netflix. So replace. It's at 198. I'll put that in our short call vertical group. Oh, we got out. So we got out of that. So we didn't take quite the max gain or max loss, but that was a trade that did not work out. Okay, so we've exited one trade that, wasn't just a single, it was closer to a triple for us. Some might even say a home run, because if you can make $500 on a trade, in an account that started at $25,000 at the beginning of the year, like $500 is 2% of your total account value. So overall, we've still, done well. But part of the ability to do well is recognizing when you're wrong and exiting before you have a max loss. And, with Netflix, maybe we should have gotten out sooner. But we didn't. So there we are on Netflix. And Microsoft is, okay, we'll do our trade management now that I'm on a roll here. So, and Microsoft, we also on the same day did a short call vertical. And so here we're going to do a poll on this. But, again, this is a stock that's been in a downtrend 4 months since it hit this high really back here at the end of October. It had one kind of attempt at a rally where it came up to a similar high and then fell down again. But, we've had 4 out of the last 5 trading days since we placed this trade. It's flirting right now. It's, this is at 400. It's in between the strikes. So we can either exit the position and say, we thought this was going to continue to fall. We're down $165 on this, but this 135 could be 250. We could be down another 300 and some dollars. We risked almost $500 on this. So there's a lot more we could lose. So let's do a little poll and say, Microsoft, take the small loss, or do we stay in and look for it, because it's trading at 401. So we're just in between the strikes. We still have 18 days left. So do we take the small loss or do we sit on our hands? So I've put a poll in there. And while you guys are answering that, we're going to go and look at some new trades. And I thought we'd go back to our buy rights, because now we've got $12,000 in cash sitting there, doing nothing. Okay. So first one we're going to look at is Halliburton. So how? And I started this morning, and people often ask me, we have a survey in the chat today. And so this is the kind of question I sometimes get in the surveys is like, how did you decide to look at energy? Well, I came down to public watch lists, the S&P 500 sector indices. And when I brought them up, I said, okay, which sector has been leading the pack over the last 3 months? Well, that would be energy. What sector has been leading the pack over the last 4 weeks? Energy. And then if you click on energy, we're at 880, it hit a new high today, and it gapped up on the open. And this dark green candle means it's pulled back from the open, but it's still trading above where it opened today. Okay. So this is why I decided to look at Halliburton and look at energy stocks. And then what I did is I created a watch list by sector. And if you don't have that, if you come to the scan tab, S&P 500, so just come down, we chose the S&P 500, and then I said, intersect that with the energy sector. And then I created, we did a scan, and then we saved that scan, and I just called it sector industry. Okay. So, and I just started clicking through. So, when it was like, why did I pick that energy stock? Well, and I may now be changing my mind on that, because when I looked at how earlier the market is really moving, like that is now a red candle on Halliburton. And when I looked at it earlier today, like it hit a new high at 37 and it wasn't a red candle. So let's go and look at the next one, which was KMI. And then I linked my watch list to my chart and I just started clicking through. So if we look at KMI has 2 things that are of interest to us in this class. One is it's under $50 a share. So this is a strategy that we could afford to do a buy right on. And you might say, like, Barb, this just came up and hit a new high. Like, why would I want to buy it now? Well, if it pulls back, and it may, like it's been on such a fast trajectory, it's been using the 10-day moving average, as a support level. But could we sell maybe the 35? It's at 33.94. And the idea is we're selling a strike in the middle of the road where we're expecting it to get run over. So if we looked at it, we could even do the 34 and it's at 33.95. And you might say, like, why on earth would I do that? I'm only making a nickel, in the appreciation of the stock. We're making 80 cents here. And if we look at our calculator and say, well, if I can make, let's say, 82 cents and I divide that by the price of the stock, 33.96, that's a 2.5% return in 18 days. Or you might say, like, well, I'd rather come out to April, give it 46 days. And we could do that. Or we could say, you know what, I'm going to sell the 35. I'd get about 1% and maybe about 1.3%. If this is 2.4, that is maybe 1.2 at half of that. And say, if I bought covered stock. And so again, this is not a home run. It's not designed to be a home run strategy. So the most we could make here is $1.48 or $148. So if I say 148 divided by what I'm paying to get in, 33.52, that's a potential return of 4.4% in 18 days. And so if you say, well, that's not too shabby, but I'm risking $3,352. Correct. What's our max amount that we can risk in this class? The max amount we can risk in this class is $500. So if we say, okay, this 10-day moving average has been acting as a support level. So let's take this 32.81, which is the current, 10-day moving average, and multiply that by 0.97. So if it goes 3% below that, we're out. 31.82. So I'm going to come to the monitor tab, trade tab, say 31.82. Am I risking more than $500? No. Because we're risking what? Less than $200 or $2 a share. We're going to buy one contract. So we're going to come here and make this a first trigger sequence. We're going to right click, create an opposite order, and then we're going to make this a market order because we're both buying back the call we sold if we're stopped out and selling the shares. And so we're going to come to our disappearing, reappearing sprocket and say, hey, if KMI goes at or below 31.82, get me out. Okay. Hit save. Confirm and send. So I want to buy 100 shares of KMI and sell the 35 call, which is about $1.07 above where it's currently trading. Check. If it goes below 31.82, I want out. Max profit 147. Am I okay with that? Okie dokie. We're putting that in our buy right covered call. And the intention here is to get, is a short-term trade where we're getting called out. Now, somebody's saying, don't forget you have a war premium in these stocks. Now, how do you handicap that? Well, one of the ways that I'm looking to, quote, handicap it or looking to take that into account is that I chose the March 20th strike. So we're in this for a very short period of time. And then we'll see, by the time March 20th rolls around, where we stand. And if this stock pulls back, it doesn't give me unlimited support, but, worst case, well, not worst case, because this stock could totally plummet, and that would be, a worse case than what I'm saying. But if it doesn't go above 35, then we get to keep this premium, or we might get to buy it back for a nickel or a dime, or, but we're looking to take advantage of the current volatility in the market by selling something. And then, if the volatility comes out of the market, hopefully it will compress the value of that option. Okay, so that's KMI. Now, let's come down and look at the next one on the list, Marathon Petroleum. Now, Marathon Petroleum, I look at Marathon and I say, okay, if I'm playing I Spy with my little eye, a game I like to play in the world of technical analysis, I see this as a diagonal resistance breakout today. And it's sitting at 207.57. Now, when I looked at it a little earlier, it was at 205. So, when I looked at, well, could we do a trade where it was already through both strikes like this, but it's, because it was, well, actually, the 195 and the 200. And we've got lots of volume on these strikes, but I have a feeling now that it'll be too close. 195, it's at 355 already, but it's already $7 through both strikes. So could we look at that and say, well, instead of the regular 50% gain we're looking for, could we place that trade and say, hey, if it goes up by 25%, I'd be happy. And now, that would be 443. So it's getting closer to our max gain. And so we might say, well, rather than doing that, if we're bullish on this sector and we're bullish on this stock, and so we might come through and say, well, what are the analysts saying about this? Well, they're raising price targets 204 to 211, 183 to 189, raise their price target to 217. So analysts seem to be bullish on this. Oh, UBS, did you just want your name in the press? Like you raised it from 220 to 221, and it's currently sitting at 207. BMO raised their price target to 225. So I'm not seeing anyone lower price targets. And it also doesn't mean that these analysts are right. But, then instead of the 195, 200, could we do the 200 to 210? We've got lots of volume. We've got a 50-cent bid-ask spread. So we're okay there. So if we came here and we said, okay, if we bought this vertical, we're risking 580. So we could lose that whole amount. And if we said, okay, on this one, we'd want that 50% gain. Now, if you wanted to be more conservative, because this is an oil stock, and if we're going for a shorter time frame, 18 days, maybe we say, you know what, we'd be good with a 25% gain. So sorry, it's now 590 times 1.25. So maybe when the market has more volatility and there's more, political instability globally, we become less greedy. Oh, I messed that up somehow. 590. I probably didn't put the 1.25. So we say, hey, if this gets to 725, we'll take the money. Okay, so does that make sense to everyone? Does that make sense? And somebody's saying, well, do you want to trade April on this? So we could trade April on this. We could do 2 trades and just see how they react. And we do a lot of that in this class. So we're going to single order, first trigger sequence. Oh, now it's to 545. Like, well, we're live in the market. So 545 times 1.25. Okay, I'm going to do that on my little calculator here because somehow I can't seem to operate that calculator today. Times 1.25, 680. So we are going to say when this gets to 680, which is a 25% return, we'll call it good. And we're going to do one of these because we're still risking $545. We're going to put that in our long call vertical group. And this is our target is a 25 versus the usual 50% return. Okay, so that's Marathon Petroleum. Now, we could come out to April instead, and we still have lots of contracts here. On this, we still have a tight bid-ask spread. I don't know why this one is so much wider. You know, and here, this is 60 cents. This is $2. Like, that seems kind of nuts. So we do the 195. Want to do the 200 and the 210. I don't know what this will come up as, so let's see. 615, but now it has to go up another $3 and some cents, but we have until April 17th for it to do that. And again, if we want a 50% return, then it's going to be over $9. So maybe again, we're a little, more modest in our aspirations, and we go for a 25% return. So 615 times 1.25. So that would be 769 or 770. That's what we can round it to 770. 770. Oh, now it's 615. Yeah. Okay. Good till canceled. And so this one, again, it's a 25% return. Target. And we are going to compare to the March expiration. Okay. Yeah, you know what? At 610, this is high for this account. Actually, this is too high over, well, this is 560. Should be 525. Let's go back. 525. If we can do that for 525. I was wondering why I didn't notice that. Okay, so yeah, 25% target and compare to March. Okay. Okay, so that's MPC. So let's look at FANG, Diamondback Energy. And so when we look at FANG and we say, okay, this has been uptrending really all year. And we had this, bull flag pattern setting up. But could we sell something with the current volatility? Because this hit a new high today and then is pulled back to 175. Could we come down to this 170? I don't know if we could sell as low as 165 and do a short put vertical. We can get rid of these lines now. Maybe sell something down here. We might be able to get enough premium and we might not, but with premiums being higher, let's see, 260 to 320. So this is March. That's only 18 days away. So that doesn't give us a lot of time here. We've got the probability of it expiring in the money at 30%. That means we've got a 70% chance of it expiring out of the money. But would we get enough premium? We get almost $1. So if we get 97 cents and we divide that by what we're risking, 403, 97 divided by 403, that's a 24% return for a trade we'd be in for no more than 18 days. But then the expectation is that it stays above that, 165 mark. And so if we look at that on the chart and we say, well, that's below, here's our 165. Are we okay with that? Does that look okay? And I'm a visual person. Some of it, some people place trades like this and they never ever look at a chart. They trade solely on probabilities. Others, and I would be one of those, I will make that confession, would not place a trade without looking at a chart. So if we say, well, I like the look of that, this rallied and came back today, it's been in a shorter or intermediate term uptrend. So I'm going to put this trade on. I'm going to put my exit in and say, hey, when this is worth, like I've got 80% of my max gain. So 97 times 0.2. When this is worth about 19 cents, I'd like to buy it back. I was going to round to 20, but got my calculator out. And we're going to put that in our short put vertical bucket. Now, given that, we just did a short put vertical trade, we do have 3 short put vertical trades on. And they are on Apple, Caterpillar, and Mickey D's. Okay. And we got out of the one on Netflix. So let's have a look at those super quick. So Apple has come back down. We placed the trade on this day. It went up, has come back down, and it's bouncing still well above our 255 strike. It's at 266. And that doesn't mean it couldn't break down, but it's come down to this diagonal support level, and it looks like that is appearing to hold. We have 18 days, so we're going to be patient with that one. How about Mickey D's? So McDonald's, again, here are our strikes. Here's when we place the trade. And today we have this, maybe not quite a bearish engulfing, but boy, that's a big red candle. So if we look at this and we say, well, we're up 32% on this. We've given almost half our profit back. Do we take the money and run? Do we take the money and run on that? And what was our last one? AU, was it take the money and run? Okay, that was Q&A. Oh, Microsoft, take the small loss. So on Microsoft, it was close, but it was 66% said yes, take the small loss. So we're going to go in and take that loss. So Microsoft, we wanted to buy it back for 16. We're saying that one didn't work out. And so, we're just making the best decision we can with the information that we have at the time, right? And that was our short call vertical. Okay. And then this was McDonald's. Let's go back to McDonald's. So with McDonald's, it looks like this 10-day moving average has been acting as a support level. That has not been compromised yet. Our short put vertical strikes are down here. We have 18 days left, so we're going to wait. Okay, we're going to wait on that one. If the short vertical goes against you, any short vertical, you can just come in to, and cancel your target. And so if we wanted to exit this, you just right click, create a closing order to buy it back, the vertical that you've sold. That's how you would do that. So, and then Caterpillar was the last one. And so this was going sideways. We put this trade on this day. I mean, it's been very bullish, right? It's not quite doubled in price, but it's had a heck of a run, up 29% year to date, kind of like a bull flag and a stiff wind. And then on Friday, we had this pattern at a, potential support level, this hammer candle or doji. And today we have a bullish engulfing pattern. And so, our strikes are at 740 and 735. It's trading, $12 above that. So we're just going to sit on our hands and be patient with that one. Okay, so guys, we are almost out of time. So here's the deal. There is a survey in the chat. And so my request is that you hit that link. There's 2 questions. 1, I hated this. 10, I loved it. And then there's everything in between. If you put a comment in, I will read it. I promise to read it. And so will the management team. And so if there are things that you'd like to see more of or less of, let me know. If there are topics I haven't covered recently that you'd like to see me cover, just put that in the comments. And if you're watching this in the archives, you can put it in the comments there. As opposed to the survey, because you won't have access to that. But yeah, and I read those and respond to those on a daily basis also. If you'd hit the like button, that's doing me a favor, because not only, as Cameron May would say, does it sound like applause to us coaches, but it helps raise the number of people that see this in the YouTube algorithms. It gives this more visibility, the more likes it gets. So I'll thank you in advance for that. Follow Connie and I in the land of X, Connie Hill CS, Barb Armstrong CS. Also, you can follow me now in the land of LinkedIn. And one of the questions I get asked often is, what did we do today? Well, our target on the long call vertical was hit on Valero, on VLO. We chose to take the money and run on our stock position on Anglo Gold, AU. We closed out and we captured the loss on Netflix. So we decided to exit both Netflix and Microsoft. Those 2 short call verticals weren't going the way they were supposed to, or the way we had intended them to go. And then we placed a trade on MPC. We did a long call vertical. We did a long call vertical on FANG, and I will make sure that these get filled. So let me go by time placed. We did a trade on MPC that didn't get in, a second trade with a second date. And then we did a trade on KMI, a buy right covered call. And so I will make sure that those get in as well. So thank you for your time and attention, guys. Up next, Mr. James Boyd. You'll want to stay tuned. Take care, everyone. Bye for now.